Yeah. Good evening, everyone. We will just wait for 5 minutes. I think students are still joining, and then we'll start.
वो गाड़ी नहीं करना था।
Good evening, everyone. Hello, Sanjay. Good evening, Sanjay.
Hi, Nisha.
Yeah, hi. Students, if you can just tell your friends also to log in, it will be helpful to join the batch immediately because it's already like 4/7. Yeah, so let me just start the session because students who have already joined, it's not fair to keep you all waiting, and maybe your friends and the other students can join. So let me just introduce myself and a little about this course and also your trainer. So I am Nisha Shah. I am a chartered accountant and have done my CA way back in 94, and I have been an investment banker for 26 years. Prior to this, I was the director at Motilal Oswal Investment Banking. heading the equity capital markets, primarily helping companies come out with an IPO, get listed on the exchange, and no, help corporates raise funds from the institutional investors. And now, currently, I am on the board of Finex, where we have tied up with your college for a number of courses. So, investment banking is one of the course. Uh, and just to tell you a very quick about Finex, what we are doing is, so we are working with almost 200 colleges pan India, and our main mission is to improve the employability of the students. So now, being in the corporate world for more than 26 years, what we realized is we had seen many of you, like, no, the students were very good academically, but when we used to take their interviews and all, we realized that there was something missing, like, no, the practical knowledge or the experiential learning was missing. Maybe, sometimes the concepts was not very clear, and that's the reason, like, many of these students could not get a good placement. So just with this vision, we have started this Finex, where we are doing a lot of courses, all short term, long term, 1 year program, 1 year PG diplomas, 2 year programs at different colleges and universities, and helping the students with the placements. So we have tie up with 50 plus corporates for the placements also. And since me and the entire senior team, we all come from the banking and financial services, are all the courses are for the BFSI sector only, and the placement partners are also all the reputed companies across BFSI. I would say across banks, mutual funds, broking companies, wealth management companies, investment banking, and also. So, and also, I just want to tell you, we are one of the largest corporate training company, and we have been training the employees of the corporate for the last 16 years. And actually, that's where the corporates had come and told us, "Ki since you have been training our employees, it will be helpful that if you give us trained resources." And that's where last 4 years we have started tying up with a lot of colleges, universities, and doing this different courses across, I would say, investments, wealth management, insurance, everything as far as the banking and financial services are concerned. So this particular course of investment banking, so your faculty, the trainer will be Sanjay Parekh, who's there on the call. And again, to tell you, Sanjay Parekh is also uh, a very senior person from the industry. He is a chartered accountant and a CFA with over 30 years of experience in a very senior leadership roles in the asset management companies and insurance. And he also has a very significant experience in startups as well as large Indian conglomerates, MNCs. So no, and this is where what we bring to the table is he in the college you have been learning, and from the academicians, this is where the industry practitioners come and share their experiences, what they have been, what the corporates are expecting, and how do you look at things. So this investment banking course will, I mean, Sanjay will give you a brief, and today it will be like introduction or a brief about the investment banking. But here in this entire 30 hours of the course, we will cover everything like the functions of the investment banker, the roles, whether it is on the consultancy side. So it will give you an overall perspective of how the investment banking operations work. So I will not take much time, and I will request Sanjay to take it over, give them a brief about what we are trying to cover in the next 30 hours of this program. And yeah, without saying that there will be a lot of case studies and activities so that you can understand it well. So over to you, Sanjay.
Yeah, thank you, Nisha. Can you hear me?
Yes, Sanjay, loud and clear.
Right. Hi, hello everyone. Good evening. My name is Sanjay, and as Nisha mentioned, let me start off by giving you. So the way it is designed is that there is a case study which will go through and understand what is happening in the case study, and then there are a few slides. We will go through all those slides, followed by at the end of each
Recording in progress.
session, there will be a quiz. The quiz share a QR code which all of you will have to scan on your mobile phones, and by that way you will be able to participate in the quiz, right? Today we will start off with an overview of investment banking, and then there are various modules which have been designed. The next module, which will happen on Thursday, will cover equity and bond markets, and thereafter next we will be covering money plus forex markets, and then to some transaction processing as to what happened behind the scenes, and we'll get into details like what the custodian does, what are the different issues in corporate actions, what are the corporate actions, what happens there, so on and so forth. So I think this is a brief overview, Nisha, on how the course is planned. I think the schedule has been shared with everyone. This sessions have been planned on every Monday, Tuesday, and Thursday from 4 to 6, except I think on the December 25th and maybe the 1st of Jan. Uh, I would like this course to be a little interactive. So if some of you can switch on your videos, that would be nice. As of now, I can only see Nisha. Let's make this more interactive. I understand there are a few of you who are doing an investment management course, and there are some students from the insurance and banking course. So, the more discussions we have, the more interesting it will be for all of us. So, can we have some of you switch on your videos, please?
Yeah, students,
It is
I
going
would
to sound
strongly
like a
recommend.
monologue.
Yeah, students, I would strongly recommend that you keep your videos on and keep it as interactive so that you can make the most of the sessions. And also, students, just wanted to tell you that from our team, our colleagues from the Finex team will get in touch with you for the process. Basically, as like no, after the course, and since many of you are from the third year, we will be helping you with the internships, placements, and all. So you will have to get registered. We'll send you the link. You'll have to get registered, and then we'll give you access to the course also on our LMS. So today being the first session, I will now hand it over to Sanjay, but I just thought I'll tell you that the Finex team will get in touch with you and will create, if not, I'm sure, a WhatsApp group also of all of you for faster communication. So, yeah, Sanjay, over to you, and I will take your lead. So, students, again, as Sanjay is saying, if you keep your videos on, it will be more interactive and you will enjoy the session. So, yeah, over to you, Sanjay.
Yep. Thank you,
Yeah,
Nisha.
bye.
Can you guys see my screen?
Yes, sir.
Okay, thank you so much. So as I mentioned, okay, let me stop sharing my screen and just give you a brief introduction about myself in more details, because Nisha has already told you that she's given you an outline of what I've done, but let me sort of get into details of what how my career has panned out so far. So I am a Mumbaiker through and through. I was born in Mumbai, and I've stayed all my life in Mumbai. I went to a school in Dadar, and I did my 10th from there. And after 10th, I decided that, being a Gujarati, there is some business in my blood. So let me take up commerce. Sydenham College was, the best college of commerce in India. So I went and joined the Sydenham College, and I did my FY as well as my BCom from Sydenham. After Sydenham, I chose to take up CA, and as a CA aspirant, you have to join a CA firm and do your articles. So it's like a 3-year experience, or like a 3-year internship, and you have to then start giving the intermediate examinations and the final examination. So I went to a lot of CA firms, some very large CA firms, some medium-sized ones, AF Ferguson, Billy Moria and Company, stuff like that. I don't even remember their names now. But finally, I chose to join a firm called Arthur Andersen. I don't know how many of you remember this firm. Can I get an indication if anybody who has heard of this firm? Anybody? Yes, no? Vaibhavi, thanks so much for switching on your video. I'll only be looking at you because nobody else, I can't see anybody else. But thank you so much. It just makes it more interesting. I'm sure not only will all of you fall asleep, but so will I. So out of Deloitte, Pricewaterhouse, PwC, EY, I'm sure you have heard of all of these firms. So Arthur Andersen was one of them. Okay. And the interesting thing was I did my articles and it was a very, very different kind of a firm in the sense that they took us on and treat us like we would come work with them for 3 years and then go and work somewhere else. So they actually treated us like full-time employees. They invested us in terms of training. They used to give us good amount of work to do, and they wouldn't really keep anything back. So if you go to I don't know how many of you are planning to do CA. I'm not sure whether a CA is something that you guys aspire to. Maybe not. Firms, since they believe that you will not stick with them for a long period of time, they don't really involve you in key projects. But that was not the case with Arthur Andersen. And most of these big four firms, they will only people who they believe want to have a career with them for a long period of time. At that time, it was an exception rather than the rule. But anyway, moving forward, I worked with them for almost 4 years. I did a lot of tax work. I was with them from 1991 to 1995. Probably born after 2000, right? If I'm not mistaken.
Yes,
Yeah.
it's 2000.
So, yeah. So yeah, I'm a little old for you guys, right? So in 1991, I don't know whether you guys may have studied it. Manmohan Singh was the finance minister, Narasimha Rao was the prime minister, and India was going through a huge foreign exchange crisis. Our foreign exchange reserves were down to a few weeks of imports, and therefore they had to pledge some gold and raise loans in foreign currency. But what they did after that was they really they really started taking steps to make India a more open economy in terms of allowing businesses to come in and do businesses. So India was a very closed country. For doing anything you needed permission from the government. You need a license to get into many industries, and it was all bureaucratic, and it used to take a lot of time. And of course there was corruption was also quite widely prevalent All of that changed in 1991. Okay. In 1991, licensing was abolished. So you needed a license only in certain industries. If you wanted to set up a factory in certain industries like defense or, some other such critical to India's defense and national priorities, you needed a license to do that. Furthermore, they opened the country to foreign investment. So again, you did not need any permission to invest in India if you were investing in a few sectors. Again, if you were they reserved a few sectors where they said you will need prior permission. So that's when all of these foreign companies started looking at India very, very seriously. And firms like Arthur Andersen and EY, Deloitte, they all came in because all their clients who were in other countries wanted to come and do business here. So they all set up shop. So it was a very exciting period. And thereafter, I cleared my final exam. It took me 2 attempts. I didn't clear my first attempt, but in the second attempt, fortunately, I got a rank. So I got a 24th rank in the CA final examinations. After that, a lot of companies sort of wrote to me saying that, we want to hire you, so please come and meet us. I got an interesting offer from the Aditya Birla Group to go and work in the chairman's office. So I was 24 years old. I was single, and I thought, wow, this seems interesting to me. And I got tired of doing tax. Tax is, if you look at a P&L, it's revenues, cost of sales, overheads, and then EBITDA, and then tax. So I thought, let me really understand what comes at the top of the P&L. And I with Kumar Mangalam Birla, who was maybe just a few years elder to me. And when I asked around, people said, "Ye Birla company, Marwadi group hai, Babu culture hai. What will you do there? You have worked for 4 years in a MNC firm where the peon calls the MD by his name, and now you will have to do this Babuji kind of a thing." But anyway, I thought, if I can't take a risk at 24, when will I take the risk? So I took that risk. And I ended up working in the Aditya Birla Group for almost 12 years. So I spent almost 5 years in the chairman's office. And it was a very, very interesting experience because I got really a bird's eye view of, many, many industries. They were in cement, they were in aluminum, they were in carbon black, they were in oil refining. And when I was there, they got into telecommunications, right? Today's Vodafone was actually Birla AT&T Communications Limited many, many years back in the year 1997, right? And today, you know it as V rather than Vodafone, actually. So I got involved in those sectors, really understood a lot. And after 5 years working with them, I thought, I should really get into the real world, which is work for a business. And the insurance sector was opening up. So look at this, right? I mean, in 1997, the government opened the telecom sector. So today, what we are able to do, we are able to do this course online. All of that would not have been possible 25, 30 years ago because you didn't even have mobile phones, right? But now mobile phones are ubiquitous. Can any of you stay away from your mobile phone for even 10 minutes? I even spend 4 or 5 hours on my mobile phone. So similar to mobile phones, life insurance was a government monopoly. You only had Life Insurance Corporation of India. For an economy to grow, you need capital. Okay, and where does capital come from? It comes from the citizens of the country, and it comes via mutual funds. It comes via insurance. So when you go and buy an insurance policy of 20 years and you pay premium for 20 years, then the insurance company has to invest that fund somewhere in the equity shares of companies or in the bonds, and they gave a loan to a company, and they earn a return, and then they pass on that return to their policy holders. So insurance was opening up, and the Birla Group had a joint venture agreement with Sun Life of Canada, which was one of the largest Canadian insurance companies, and they were also into investment management. So I went and joined that startup, which is what Nisha was mentioning, that I worked in startups and I worked in established companies. So that was a startup. I was like the 8th employee. We didn't even have a license. But it was one company where I had a lot of fun. I really enjoyed that stint. I got to learn a lot. I joined that company as head of accounting. That is the privilege I had because I'd spent some time in the chairman's office. Um, I did accounting for 2 years because if you recall, I said I had spent 4 years in the tax department of Arthur Andersen, and then I had not done an audit in my articleship. I had not done an accounting entry after that. So I thought, let me at least do some basic accounting. So that's why I took up this role as head of accounting. I did that for 2 years, and I quickly realized that all the processes were set, the team was in place, the company had grown quite large. From the 8th employee, we were probably 500, 600 employees, and then I during that time also I started my CFA and completed my CFA. So then they gave me an assignment as head of product management, designing and developing and launching life insurance policies. So that was like a marketing kind of a role, and that role gave me a lot of exposure to clients and to sales channels, and my understanding of life insurance as a product really improved considerably. Thereafter, in 2006, I got an opportunity to move to the mutual fund side, and I thought with my CFA degree, I should be working with a pure asset manager rather than with a life insurance company. So I joined Aditya Birla Mutual Fund as the CFO. And to cut a long story short, I have since then worked with 4 different mutual funds as a CFO, CEO. From the Birla Group, I then joined a very small company called Taurus Mutual Fund, thinking that I will, use my experience in life insurance and mutual fund to really uh, grow that business. And I worked with Taurus for almost 6 years. Taurus was a Delhi-based company. We moved all operations to Mumbai, launched a lot of products, took their AUM from 500 crores to 5,000 crores. But then it was clear to me that it was not going to become a very large company. So that's when I moved to Deutsche as again a chief operations officer. Now, Deutsche Bank, as you know, is a very large German bank with operations all over the world. They are into retail banking, corporate banking, asset management, equity broking, debt capital markets, all kinds of different businesses in financial services. And they had a mutual fund in India, and I joined that as a CEO. But within 2 years, they announced that they were selling. They were actually in real trouble all over the world, except in India. In India, they were doing quite well, but globally, they were making a huge amount of losses. So they wanted to generate capital. So they were selling off all their profitable businesses. And mutual fund was a profitable business in India. It was quite large also. It was managing an AUM of almost 25,000 crores. So they sold that business to America. And that's when I had to again look for another assignment, and I got into touch with the Mahindra Group, which was looking to get into the mutual fund business. So again, another startup. So I joined them as CFO, managing finance, accounts, customer service, investment operations, stuff like that. Again, we took their it was a startup. We launched the first scheme and took the AUM from 0 to almost 4,000 crores. Then I had a short stint with Mahindra Finance as head of finance, and they were nice enough and kind enough to give me that opportunity. But things didn't work out. There was some management change, and due to that, I went and joined Enam Asset Management as COO. Okay, but my experience with Enam was not so great. It was a very small company. It was a small company in terms of employees. It had 50 employees, a pure play asset management company, year-old company, owner managed and driven. And somehow I couldn't really there, so I decided to leave. And now I've started my own wealth management venture using all my experience and my education. So that's what I'm doing. But I also love teaching. So along with CIEL, you know, I have taken two courses for some MBA students in a college in Malad, and this is my third assignment with them. So I'm really looking forward to interacting with all of you forward. Any questions you guys want to ask to me before we start? Take a sip of water.
No, sir.
What are you guys looking at doing after you finish your graduation? How many of you are looking at a career in investment banking? Yes, Om? How many of you looking at working? What is your career or dream company to work for? Anybody? Anurag, Sarthak?
So could you repeat the question? Actually, my meeting got left
I
a
was
gap.
asking what's the kind of role or company that you guys are aspiring for after you graduate? Anyone?
Just I really haven't thought about.
Okay. You may not think about it, but what is it that interests you as of now? You guys have been studying financial services for almost more than 2 years now,
Yes, sir.
right? So
Yep.
which part of financial services is you find interesting? Kajal? Harsh? No? Okay. Have you guys gone through the case study that was made available to you in the Finex login? Yes, no?
No, sir.
Thank you. Okay, let's start the session then in terms of, the real content. So this is what we are going to do today. We are going to do an overview of investment banking, financial service. Though you call financial services as an industry, there are many, many parts of financial services. And can anybody explain to me what is the definition of financial services industry? Anybody is aware? Where various their primary role is to take funds from households, corporates, and governments and provide it to households, corporates, and government who have a deficiency as far as funds is concerned, right? So if you want to buy a house, or if you want to buy a mobile phone, or if you want to buy a fancy TV, or you want to go on a holiday, and you do not have the funds to complete your wish or make the purchase, then you will go and take a loan. So whereas you are going to approach a bank or some other NBFC like Bajaj Finance to take the loan. And where is that loan coming from? Bajaj Finance is basically raising money from fixed deposits, which they issue to retail investors. They are raising loans from other banks, and they are making issues to institutions like mutual funds and insurance companies, and then using that money to lend to retail customers as to other customers who are in need of funds. And the basic margin, that is, they charge you an interest and they are paying an interest to their lenders. That is their basic, what they call the gross interest margin, from which they take out all their expenses and they make profit. So financial services is, as I mentioned, the industry where surplus funds of people are transferred to those who need it. And investment banking is a specific service which helps companies and companies raise money either via equity or via debt. So when you want to raise equity, you do different kinds of issues. You will do an initial public offer, or you'll do a follow-on public offer. And there are various other different ways in which you can raise equity. Debt is, of course, you can, take a loan from a bank, or you can do a private placement of debentures and bonds, or you can do a retail issue of bonds and debentures. So again, you will need the services of an investment bank issue that you want to do. Why is an investment banker required? Because there are many rules and regulations which have been put in place by SEBI, and therefore they are the ones who are experts at those rules and regulations. They know the current status of the market, so they'll be able to help companies in determining at what price you can raise equity, what is the quantum of equity you can raise, what is the timing at which you can raise equities. In fact, one of the last week was, a very, very important week as far as primary markets is concerned. Can anybody tell me what happened last week? Yes, no? Yes, 5 IPOs. What happened to those IPOs, Siddharth? they were all majorly oversubscribed, in the sense that Tata Technologies was one IPO, Fedbank Financial Services was another IPO. So if Tata Technologies wanted to raise an amount of, let's say, like 3,000 crores, people actually applied for almost 75,000 crores of Tata. So that was the kind of demand that was there in the market for all these IPOs. So, the timing, the pricing, all of these things are done with the help of a investment bank. So we are going to cover all of these items today. What is investment banking? What are the services offered by what are the functions as far as what are the different services provided by an investment bank? Then how is an investment banker internally managed, in the sense that, even it has got different divisions. So what are the main divisions of an investment bank? And then finally, we will talk about, what has been the growth of investment banking in India. Okay. Going to the next slide. So during this entire course, we will be looking at this Freshers Foods case study. And since most of you have not read it, I would suggest you go through this case study on investment banking. Can you see the PDF on my screen, please?
Yes, sir.
Yeah, thank you. So Freshers Foods International Limited is a company in the FMCG industry, and it has almost over 300 products, and it has almost 6 manufacturing facilities across the country. This company was looking at expanding its business outside India, and therefore they looked at raising funds to fund their expansion, and they decided that they will do an IPO, and therefore they hired this company called Stringency Advisory Private Limited as their investment banker to manage their IPO. So the IPO was done on November 7, 2010, and it was oversubscribed to the extent of 27 times, right? After the IPO, the company looked at expanding its products, and they identified a biscuit manufacturer in Europe. And again, Stringency Advisory, their M&A division, helped Freshers Foods in acquiring that company. So again, there are different issues involved when you are doing an IPO, as well as doing a takeover, or you're purchasing another company. Especially cross-border takeovers become even more complicated, because not only do you have to look at the regulations in India, but you will have to look at regulations outside India as well, because the laws and other capital market requirements of those countries will be very different to what happens in India. So mostly you would be better off hiring, an MNC investment banker, because then they would probably have an office in the country where you are doing an acquisition. And, you will have to, it's better to, the internal issues between the two of them are better managed, rather than having two different investment bankers, one in India and another one. In this case, since the company was in Slovenia, you would need an investment banker based out of Slovenia. right? So that is the case study. I think we will use the Freshers Foods example throughout the course. And as they move along from a startup to a well entrenched, a strong and large company, we will they will keep using investment banking services. So we'll look at each of those case studies and look at each of them deeply as we move ahead. So this is the case study for today's session. We will look at what are the different services that Stringency Advisors have able to offer Freshers Foods when they are doing this IPO. Okay, any questions, any queries before we move on to the next slide? So this is something that we have already discussed. So 12, they did the IPO, and Agency Advisors was involved in the IPO. Then after another 5 years, when the company had expanded substantially, they went and acquired this company in Slovenia. So this is again, mergers and acquisition is one of the key services offered by an investment banker. As the company was profitable even before they did their IPO, they were looking to invest their surplus funds, and they again utilized the services of the investment banker to in which investments they will invest their surplus funds, and to further fund their capex plans going forward, they right. Going forward, okay, we can do a small bit of discussion here. Anybody has any? Can anybody just let me know what are the 3 or 4 different services provided by an investment banker? Yes, Siddhant?
M&A,
Yes. Then
trading,
trading. Okay.
M&A,
Raising capital. Yes. Om. Legal compliances. Yes. Only to the extent of raising capital and M&A and stuff like that. They will probably not be able to advise on compliances related to other parts of the business. Helps with underwriting. Yes, Dishika, what is your understanding of underwriting? It would be nice if you guys can unmute and open your videos. Yes, legal and compliances related to M&A and IPO legalities. Absolutely right. Raising funds, M&A, investments, underwriting. Underwriting is a part of raising funds, right? So these are trading. These are some of the key services provided by an investment bank. So do you guys believe investment banking is like a sought after career? Is it like, do you think those guys are well paid? Any idea? Extremely well paid. Okay. What do you mean by extremely well paid? You have a figure in mind? Handsome क्या होता है यार? A few thousands, a few lakhs, a few crores. But still, none of you want to do a career in investment banking. Is that correct? Helping to facilitate mergers and acquisitions. Yes, absolutely. So typically speaking, just digressing a bit here, they're working in as in top management executives can anywhere north of 80 LPA and 1 crore. But 80 LPA is fixed, or that would include of your bonus? Is that CTC or is that just fixed? I don't think so, yaar. 80 lakhs including incentives is nothing. How investment banking is different from normal banking? So what is normal banking, Vaibhavi? What do you understand by normal banking? So typically, Siddhant, to get back to you on the salary ranges for investment banking, they will have decent fixed salaries. I would say that the top guys, and when I say the top guys, I'm not talking about the MD, but some of the top guys will make anywhere from maybe 80 lakhs to 2 crores. So depending on which firm you're working for. But then it's also a very cyclical industry. Why is it a cyclical industry? Because, you know, it peaks like it is peaking. Last week it peaked, right? We had a huge amount of oversubscription. So a lot of companies want to raise capital. So all these investment bankers will get a lot of mandates. They will earn a lot of fees. So everybody who's in the investment banking business, their fees are going to peak in this year, right? And because investment banks have no other expenditure, what is their product? They're selling investment banking as a service. They don't manufacture anything. They're professionals who help you raise money. So as soon as the money is raised, they will take their 0.5%, 1% fee, and they will walk away. So let's assume if they have raised something like 20,000 crores in a year, and if they're charging, let's say, 1% as a fee, then their top line is 200 crores. And what is the cost they have? If they have hired 50 people, and if, let's say, their average salary that they pay to those 50 people is, let's say, 50 lakhs per annum, then 25 crores is their fixed cost. Let's assume they spend another 15 crores in rental, electricity, administration. So the total cost of a 50 crore company, of a 50 employee company, will be around 25 crores or around 4 crores. And their revenues are 200 crores. So 160 crores will be their profit. And that's why they get a huge amount of bonus, because that out of that 160 crore, you can well understand that, maybe 100 crore or 75 to 80 crores. I don't know. It depends on the owner of that business. How much amount is he going to distribute as bonus to those employees? So we We took an assumption there are 50 employees, average salary is 50 lakhs. Okay. So salary is total salary bill is 25 crores. So if he's going to if they're going to distribute 100 crores as bonus, so you can imagine you will get 4 times of your fixed cost on an average, 4 times your fixed cost as a bonus, right? But normally bonuses are to their in the range of 25 to 30% to 50%, 100% if you're in a equity broking kind of an industry, but only in investment banking and equity trading and all these kind of businesses will you have a bonus which is a multiple of your fixed cost. Okay, I hope that helps. Right? Yes, no? Guys, this is getting boring. I'm going to fall asleep now. Right? This is what investment banking, I think we've discussed this already. It underwrites initial public offerings, not only just initial public offerings, it will underwrite things like follow-on public offers, private placements, all those kind of things. So wherever you want to raise money through equities, you will have an investment banker who's involved. Okay. Somebody's saying something. Let me just check. Would investment banks still perform in the future? Offer a much better way of raising capital. Yeah, but VCs and PE funds, they play a different role. They play a role in the startup ecosystem. Okay, investment banks come in because VCs and PEs need an exit, right? If a venture capital has invested 100 crore in a company like a Paytm, either it has to find another private equity fund to whom it can sell its funds at the current valuation, or it has to then sell funds, it has to do an IPO. Right? So what happens in an IPO? In IPO, either the company issues fresh shares or there is an offer for sale. So some of these existing shareholders will sell their shares and take an exit. Right? I hope that answers your question. We will be covering some of this going forward. So I don't want to tell you everything today. Otherwise, we'll have a challenge talking about it. Vaibhavi, to come back to your Vaibhavi Chinchan Sure. It's a long name. So Vaibhavi, to answer your question on what is the difference between investment banking and normal banking. The normal banking is where you give bank accounting kind of services where you allow people to open an account with you, a savings bank account or a current bank account. People deposit their funds in that account. They issue checks from that account, or they open a fixed deposit with you. And the bank then can use that funds to give loans to their customers because the banks will give you an interest, and people will keep that money in their savings accounts or in their fixed deposits for quite some time. So some part of that entire money is invested by the bank in government securities, because those of you who are doing banking will know RBI requires all banks to maintain CRR and SLR ratios. And the balance after that, which is close to around 83% of the deposits, can be given out as loans. And again, that's how the bank makes money, right? They charge loans, they charge interest to the loans that they have given to their customers, and they pay interest to their depositors, and they make the spread, and from that spread they take out all their expenses, employee overheads, administration expenses of maintaining ATMs, branches, all kinds of other expenses, and then they will make a profit. So investment banking is where you are helping companies raise capital, and normal banking is where you're accepting deposits and you're giving loans out to people. Okay, so it's a very So investment banking is a very, very specialized field. A lot of the main banks like a Kotak Bank or a HDFC Bank and ICICI Bank will have an investment banking division. Okay, so they will also offer these services to their corporate clients mainly, right? I hope that explanation is adequate. Okay, so coming back to the slide, it does M&A, it does reorganizations. When we say reorganizations, it's like sometimes companies diversify into different businesses. Like to give you, ITC is a company which is mainly into tobacco. They manufacture and sell cigarettes, but they also do a lot of. They have now diversified into FMCG products. They have diversified into products such as snacks, ice creams, personal use products like soaps and shampoos and stuff like that, and also hotels. So sometimes then you find that one division doing too well, you will probably sell some part of your business which is not doing well, and then that's again a service that is offered by investment bankers, right? Classmate books. What is Classmate books? Are they an investment banker? Okay, they also handle investments as we discussed earlier. Example of ITC production. Yes, absolutely. So, okay, because they're also into the paper business, and you're absolutely right. They probably make notebooks which some of you might be using. Me also. Okay, what else? Investment bankers advise businesses in certain situations, governments on financial matters. Yes. Fundraising, we've discussed, issuing stocks, issuing bonds, and sometimes even selling the firm on the whole. Any idea where you have heard of any situations where an entire firm has been sold? How many of you have heard of a brand called Bisleri? Glucose. So there was some story which came out that the Chauhans, the family which owns Parle and Bisleri, they wanted to sell their entire business. But I think that is probably not happening. And a recent story, if you guys have heard, is about Cipla. The Cipla is a large pharmaceutical company which is also listed, and it is this family by the name of Hamid. And their next generation was not interested in doing the business, so they're thinking of selling the entire business. And I think the Torrent pharmaceutical groups of Ahmedabad or Gujarat is seriously considering buying that business, right? So setting up the sale of the firm as a whole is also one of the services offered by investment banking. Going back to my career, as I told you, I used to work for Deutsche Bank. And if you recall, I told you that I used to work for the mutual fund business, which was sold by them to Pramerica. Now, Deutsche Bank itself is an investment banker, so they manage this entire transaction in-house, and their own investment banking team was involved in the transaction. So they would, what they would do is they would prepare a request for proposal. Then they would approach people who they believe are interested, would be interested in buying the business. So they would share certain details of the business with them. Based on that, people would express an interest in buying that business, and then they would, get into more detailed discussions, and the buyer would probably hire their own due diligence team, and then after looking at the business in detail, they would decide whether they would want to buy that business or would not, and therefore they would place a bid, and it's called a non-binding bid, which means that they're placing a bid, but it's subject to certain conditions that they'll do a more detailed due diligence to the management, get into more details, and then they would put a binding bid which they can't walk away from. Okay, so that's generally the business or the process that investment bankers would follow, which at least I was involved in the Deutsche Bank's business. And to give you another example of a conglomerate, Grasim Industries was the flagship company in the 1990s and early 2000s. It still is a significant part of the Birla Group because it still is a listed company. And it is now, I think, the holding company of their whole financial services business. And Grasim was a diversified company. So they would talk about, they were in the viscostaple fiber business. They were into carbon black. Sorry, not carbon black. They were into textiles. They were into cement. They were into sponge iron. So very different businesses, all unrelated. Today the firm will look very, very different because all these businesses have got demerged into various legal entities of their own. So cement is now part of Ultratech, but Grasim owns a huge chunk of Ultratech, so it is still called a cement company. But it now, I think, solely focuses on caustic soda, so chemicals. It is now a chemical business company, and it has during that time, sponge iron, they had a sponge iron factory at Alibag, and it was like a standalone part of a steel business, and the Birlas had no other they had no other part in either the upstream or the downstream activities of sponge iron. So they sold that business to a different company, and they got out of it. So again, of a division of the company's role that was done by an investment banker, right? So moving ahead, again, services offered by an investment is sales and trading of shares and debentures, M&A activity we discussed. Equity research, you're interested in buying a rival, or you're looking at entering into a new sector. You may want to do a deeper analysis of that sector or industry, and that's where you can look at equity research being done by an investment bank to see whether it's an attractive sector to get into or not. And asset servicing is investing surplus funds, which we have discussed already. Okay, more of the same thing. Corporate restructurings is like, if you as a company are not doing too well, now you are getting into insolvency. So that is another avenue that has opened up for investment bankers. So you can go and start negotiating with your shareholders as well as your lenders to write down their loans, take a haircut, and make the company viable going forward, right? Cross-border transactions are raising money through ADRs or GDRs in the US market or in Europe, or doing M&A transactions. M&A transactions, that some examples are when Tata Motors bought Jaguar Land Rover in the early 2000s, or when Hindalco bought Novelis. Again, it was a US company, so they bought a downstream aluminium player. So those are again cross-border transactions. Valuations is, you want to buy something, you're not sure what the price is, so you hire somebody, and this is typically unlisted, or stocks, because if the company is listed, the prices are being quoted every day, right? So these are some of the activities again that investment bankers do. Okay, let's talk in detail about, are there any more chats? Vaishnavi, you're talking Tatas. What is your reference to Tatas? You'll have to elaborate more. I'm not able to decipher what you're saying. Anyway, moving ahead. So underwriting is actually a part of, IPOs, and the way it works is, yeah, absolutely, it's a conglomerate. And the way it works is, you decide that you want to raise 500 crores. You decide that you want to charge, 100 crores as 100 rupees per share as your price. So you will issue 5 crore shares to the public. But of course, it's not clear whether the public will be interested, or, even some of the mutual funds or other investors would be interested in investing in your shares. And therefore, you as an issuer would want some kind of a confirmation from the investment banker that, I want to ensure that I will raise 500 crores. So you need to help me do that by underwriting some portion of the equity. So the investment banker will offer a separate service called underwriting, where they will say that, okay, raise money, I will charge you maybe 1% or 2% of that entire issue as my fee. But for underwriting, I will charge you a separate fee. And in case there is inadequate demand, then I will bring money to and pay you that money, and the shares will be issued to me. As you can see here, there will be a huge fund requirement. So let's take this example of 500 crores that we just discussed. You are issuing 5 crore shares at 100 rupees. So that comes to, 500 crores. And let's say that the investment banker, after the issue closes, they were able to get subscription only for 4.5 crore shares. So if the issue was underwritten, then the underwriter will have to take up the balance 50 lakh shares and, pay those 50 crore rupees to the issuer. And then they, of course, will have to load those shares in the market, because they are not in the business of making investment. They are in the business of doing underwriting, right? So they will charge their fee, and then once the share is listed and it starts trading, since there is inadequate demand, the underwriter will have to take a call. Are they going to keep the shares on their books till the prices of the shares go beyond 100, or will they sort of book a loss and be done with it? So that's the kind of call that the underwriter will have to take. Okay. So there are again these different kinds of underwriting. One is, where the underwriter will say, okay, I'll give you the entire 5 crore shares. So that's like a firm commitment. One is a best effort underwriting. So there is no underwriting actually involved here. So the investment banker will say, I will go into the market. I will study your business. I will do a valuation. I'll give you a range of pricing that you should be able to get. And then I'll go into the market and try my level best to sell the shares, but I'm not going to commit to you that I will take up any shares that are not finally sold. Okay. Again, these are different types of underwriting where either the entire deal is underwritten or there is nothing is underwritten. And here only if a minimum amount is taken up, therefore then the underwriting services will kick in. Right. Again, these are two further more different variants of underwriting. So M&A advisory, as we discussed, these are nothing to do with raising funds, but this is things to do with deployment of funds. So let's say in the previous example, you raise 500 crores. So you could raise 500 crores for different purposes. Let's say you raised one objective could be that you want to expand your business, like in the case of Freshest Foods, they wanted to expand their manufacturing facilities. So they already have a plan in place, which will say, I will set up 3 more factories, and therefore each factory will cost me something like 200 crores each. So therefore 3 factories will cost me 500 crores. So in case you are not able to raise 500 crores, then that plan will not be met, and then you will have to look for a further source of funds. So that's where underwriting comes in and ensures that you will get your 500 crores, and therefore you can go ahead with your proposed business plans. But in M&A, instead of setting up a greenfield factory, you will say that let me buy some Bikaji manufacturing something wafers. I find that you found that Bikaji wafers is a good addition to your business. So instead of setting up a greenfield factory, you decide to buy them as a business, and that's when you will hire a investment banker to help you again do the valuation, do the negotiation, do all the contracts, and complete the transaction where the asset is transferred to the buying company and the proceeds are transferred to the seller of the business. Okay. Moving again, investment banks provide asset management services. You as a company when I used to work for mutual funds, a lot of companies like Reliance, L&T, ITC, Hindustan Unilever, they all had surplus funds. They would not keep their funds in their current accounts because they don't earn any interest in those current accounts, but they would park these surplus funds with mutual funds which offer liquid schemes. And these liquid schemes are primarily investing in commercial papers issued by other companies, as well as certificates of deposits issued by banks. So remember, we were talking that there are companies which are in need of funds, and there are companies which have surplus funds. So mutual funds are an intermediary which where they collect funds from companies which have surplus funds, and they give loans to companies in the form of investing in their commercial papers and certificates of deposits, and certain interest income is earned by them, which is then passed on to these companies through their NAV. So when we take up money markets and bond markets in the next two sessions, we will discuss more about this fixed income securities and how mutual funds play a role in. So these companies, they invest in these liquid mutual funds, They invest in, liquid mutual funds, of course, invest in papers less than 90 days old. But there are other mutual fund schemes which invest in longer dated paper, like ultra short term bond fund schemes, low duration schemes, medium duration schemes, corporate bond schemes, banking and PSU schemes. So these are all mutual fund schemes offered by asset management companies, in which it is mostly these corporates who invest their surplus funds. Okay. Some corporates want to take a higher risk, so they may invest even in equity shares, and equity shares could be direct shares. So they could go and buy shares of, an Infosys or a TCS directly, or they would invest in equity mutual funds or even in PMS. Okay. So coming to the divisions of an investment bank. So investment bank is a company in its or a business in its own right. So it has a front office. So front office basically comprises of the corporate finance divisions, which are people who help companies in raising capital, doing M&A. So these are the revenue functions of an investment bank. They earn revenues for the company. Sales and trading, again, people who want to, these are the departments which do the investments for corporates who want to manage their surplus. So this could be in either in equities or fixed income. Again, they make fee income from investments. So middle office will comprise of risk management. So risk management would mean, if you are doing underwriting, the risk management, you will the front office guys will have to take a sign off from the risk management team that they can go and give a proposal to a company for doing underwriting or for raising capital, and they're not being overly aggressive, because as we have seen in underwriting, you will have to pick up the shares which are finally not sold in the market, right? And back office would be, the teams which do accounting, which manage the offices, which do the hiring of people, managing their payroll, which ensure compliance with all the relevant regulations. Okay. So these are the major divisions of an investment bank: the front office, the middle office, and the back office. Okay, but these are not very large divisions, as we discussed. Typically they would be 50 to 70 people. I would be surprised if it is more than that. And typically out of the 50 people, 30-35 people will be in their front office. The middle office and the back office teams would really not be very, very large. So investment banking in India is, it really took off in, it has been in place ever since, shares were traded in the market and people were doing IPOs. But it's got more complicated. So you had some of the homegrown companies like, JM Financial, DSP, the DSP group, the Kotak group, as well as who else? Even Inam Securities, right? So these were the Indian-owned firms which were active in investment banking. They would also do a lot of M&As because they had, contacts with all the Birlas and the Tatas of the world, and they would do all the deal structuring and all that. But as the economy opened up, some of the foreign banks and some of the domestic banks like HDFC and ICICI, they have also set up investment banks. And Inam, where I used to work, they sold their business to Axis Bank, and their entire investment banking and equity broking business was sold to Axis Bank in the year 2010. And since then, Axis Bank is also a player in the investment banking industry. And you'll recall I had mentioned that investment banking, Deutsche was a foreign bank, is a foreign bank which is doing business in India. So they offer investment banking services. JP Morgan, Bank of America, all of these foreign banks, Merrill Lynch, Morgan Stanley, UBS, Credit Suisse, all of them will have investment banking divisions in India, but along with other services that they offer to corporate clients in India, right? So that is the, I think that brings us to the end of the session. Any questions? Avendus, yes, correct. Avendus is a homegrown investment bank, and it's also a large asset manager. If you see, Avendus was a spin-off from, I think, Ambit, if I'm not mistaken. And Ambit was started by the partner who used to run Arthur Andersen in India. So again, these can show slide 11 again. Okay. What is there in slide 11? Yes, here is slide 11. Any questions on slide 11? So after this, we have a quiz.